Ladies and gentlemen, good afternoon. Simon Carr from Hewlett-Packard. Thanks very much all for joining us. I have the pleasure of introducing Dr. Mark Thompson, and I must say that many have said there are really three certainties in life: birth, death, and taxes. I think we can probably add fog at Canberra Airport and Sydney Airport now to that at this time of the year. So I know, Mark, welcome, because I was nearly going to have to give your speech as well, as you were stuck in Sydney this morning. So Hertz came to the rescue, I believe, to loan you a car. So that's good. I think also, as well as the three certainties in our life, there are certainly three certainties in the defence world: white papers, budgets, and Mark Thompson's budget brief on an annual basis. This year we are blessed of having a trifecta. We've got all three. The white paper preceded the budget by only a couple of weeks, and so that's going to add some interesting intrigue, I think, to what Mark is going to talk to us about. For those of us around the defence industry, we've grown up to expect Mark's annual analysis, as Peter said, number 12 now in our book collection. I'm still personally amazed and grateful at the speed that Mark turns around his analysis, and also how he can make sense of it all for just mere mortals like ourselves, and certainly myself, and put it into language that we can hopefully understand. This year, we're actually looking forward to something slightly different, with potentially an increase in defence spending. So Mark will take us through that. There's always good and bad in that. Which sector is going to win? I'm hoping for many of us in the room that Mark's going to explain the increased budget on IT spend, which will be very good for a number of us, and I'm sure for people in defence as well. Mark is well known to all of us, I'm sure, but just a few little facts. This is his 12th year of providing the budget analysis for us. He began his career as an academic, working in the Department of Defence from the 1990s. A variety of roles: budget management, so obviously a good training from that side in learning that, organisational change, and force development. During his time at ASPI, he's participated in the government's review of the ADF recruitment and retention. That was in 2005. And he was a member of the Defence Industry Policy Review team in 2006. I'm going to say no more now, because I know that Mark's got a lot of slides and he's tested the technology, so hopefully that's all going to work. But I'd like you to join me in welcoming Dr. Mark Thompson for his annual budget review.
I'd just like to start with a couple of acknowledgements. First of all, the budget brief, if you haven't seen, it's got a cartoon again this year. It is very much an effort that requires lots and lots of people at ASPI to help me pull it together. I'd like to acknowledge the very hard work that a whole lot of people put into helping me pull it together this year. Second, I'm very fortunate that the Department of Defence each year provides some feedback on what I've done. Of course, the Department of Defence endorses nothing I say, and all of the errors and omissions that I might have in my analysis are entirely my responsibility. So let's kick things off. What a difference a year can make. 12 months ago, it looked as though the government had abandoned the goals of the 2009 White Paper. More than $20 billion of promised defence spending had either been cut or deferred in the preceding 3 years. Last year, funding for defence fell in real terms by about 10%, pushing the share of GDP down to 1.6%. That was the lowest level since 1938. This year things look different. Defence spending is on the rise again, and the government has released a new defence white paper, essentially recommitting itself to the capability goals of its 2009 predecessor. On current plans, the defence budget will increase in real terms by about 2.3% next financial year to reach $25.4 billion. From that point, it will continue to grow for another 3 years to reach $28.6 billion. That's all measured in today's dollars. To deliver an average rate of growth of 3.6% in real terms over 4 years. But that's only the start. If the government makes good on its foreshadowed $220 billion of financial guidance for the 6 years that follow, there'll be enough money available to grow the defence budget to a height of $33.2 billion by 2022, at an annual rate of growth for those final 6 years of about 2.5% per annum. But don't pop the champagne corks yet. This seemingly impressive growth is growth that's coming from a low base. In the 48 months between the release of the 2009 and the 2013 Defence White Papers, around $20 billion of promised funding was either withdrawn and taken back to Treasury or deferred to some unspecified point in the future, all in the headlong rush to try and deliver a surplus this financial year for the Commonwealth. As things stand, it'll be 2 more years before defence spending manages to dig itself out of the hole that was dug in search of a surplus. So is there enough money? Because of the secrecy surrounding the actual funding promised back in 2009, it's hard to say precisely how much less money there is today compared with back then. But if we take the 2009 funding commitment at face value, that's 3% real growth out to 2017-18 and 2.2% real growth subsequent to that, we can make an estimate. And the difference comes out to be about $33 billion over the period 2009 to 2022. It's perhaps not surprising, therefore, that the defence share of GDP across the next decade will not breach 1.7%. It'll go up to about 1.66%, and then it'll slowly glide back down subsequent to that. Of course, GDP share is a poor measure of the adequacy of defence spending. It's actually been trending down just about every year since the end of the Vietnam conflict as a result of faster pace in the growth of the economy overall. What really matters is whether the government has committed enough money to deliver the defence force it says we need. The short answer is it has not. Here's how things stand. The planned scale and sophistication of the ADF has not reduced appreciably since the 2009 White Paper. In fact, in some key areas, the aspiration has grown. Not only did the new White Paper announce the purchase of 12 previously unplanned Growler-configured Super Hornet aircraft, but now we know we're going to be keeping the Super Hornets and the Growlers in service all the way out to 2030, concurrent with the yet-to-be-acquired F-35 Joint Strike Fighter. As a result, the prudent and efficient strategy of consolidating the RAAF's fast jet fleets has been abandoned, with the consequence of much higher personnel and operating expenses in the years ahead. Similarly, for the government's decision to suspend consideration of off-the-shelf options for the Collins-class submarine replacement. What's been left on the table are the 2 most expensive and the 2 most risky options that were being discussed back in 2009. And that's not before we start looking at the consequences of the Force Posture Review, which made a number of recommendations about updating and remediating defence facilities, including airfields and ports to our north. So even if the 2009 Defence White Paper was affordable, and it probably wasn't in the long term, but if it was, it follows that with more capability and less money, the 2013 Defence White Paper is not. The same conclusion can be reached by looking at the cost of maintaining a state-of-the-art military force. US data going back to the 1950s allows a per-unit cost of acquiring and maintaining and operating equipment to be extracted. Here's an example that has to do with active-duty combat ships in the US Navy. Similar results hold for the number of people in the Army and for the number of combat aircraft in the USAF. And in all cases, the underlying real rate of growth above inflation comes out to be about 3% per annum. This is a trend going back to 1950. Remember now we've only got 2.5% real growth stretching out at the end of the decade that we have a funding visibility of. On that basis, we'll be lucky to maintain the scale and sophistication of the force we have, let alone expand it. To the extent there's been a political debate over defence spending, it's been very cautious and very low-key. Both sides of politics aspire to spend 2% of GDP, but only when economic circumstances allow. More critically, neither side of politics has ventured to say whether they'll make a commitment sufficient to deliver the force planned at the moment, nor have they ventured to say where they would choose not to develop the ADF to close the gap between means and ends. As a result, we're in a situation of bipartisan make-believe. Things could get worse. This year's boost to defence spending was a direct consequence of the government's failure to deliver a surplus. Had a surplus been within reach, the defence budget would probably have come under additional pressure. The $21 billion blowout in this year's fiscal balance provided breathing space for additional funding to be granted to defence. There's a binary calculus at play. Because the Australian government's net debt is small in absolute terms, the further accumulation of debt is of political concern only if it prohibits a surplus from being delivered. With a surplus beyond reach for the moment, the impediments to spending were weakened. Thus, in this year's budget, the Treasurer's loss became the Defence Minister's gain. Here's the problem: we're not in surplus yet. Whoever comes to government in September will want to get out of deficit before they face the electorate again. It's within that 3-year period. So at some point, we're going to be right back where we were last year, with defence spending just one of many areas where the government of the day will be looking to squeeze down spending to get the budget over the line and into the black. Just to remind you of the situation as it looked last year. Here's the projected budget situation, the fiscal surplus last financial year in May, and you could see here the projection was we'd get a small surplus here, a small one here, and we'd gradually grow up into the black 2015, 2016. And here's the cuts and the deferrals that were made to the defence budget. There's no accident that the cuts are highest in the years where the government was seeking to get back into surplus. The defence budget suffered as a consequence of trying to get the budget back over the line. The same thing happened in the recovery from the recession in the early 1980s, and it happened again in the recovery following the recession in the early 1990s. In the Australian political logic, there's a great prize to be won by bringing the budget back into surplus, and we're not there yet, so at some point in the next few years we can expect defence to come under pressure. One of the reasons both sides of politics are reticent to commit to a long-term figure for defence spending is the substantial uncertainty over future tax revenues. Economists have been busy in recent months trying to understand the extent of our structural deficit. It's a problem we picked up back in 2007, but has only been properly acknowledged recently. This much appears clear. The surplus promised for this year became a deficit because of several factors, but the most important of them was a deterioration in Australia's terms of trade. That is, the rate at which our exports generate revenue in our own currency. Between its peak in late 2011 and the end of 2012, where the data ends, Australia's terms of trade fell by 17%. The government's current fiscal projections are based on our terms of trade only declining by a further 2.5% between now and 2015. If it falls further, revenues will decline further and the government's fiscal situation will worsen. We're not out of the woods yet. If events over the last few years have taught us anything, it's that defence spending is at the mercy of the health of the government's finances. So what's going on? Notwithstanding the fiscal breathing space created by the failure to achieve a surplus, this year's boost to defence was not pain-free for the government. While defence got more money in this budget, other areas were being cut. Consider this. the full cost of the Growler acquisition, about $3 billion, is higher than the savings over the forward estimates from scrapping the baby bonus. Comes in at $2.5 billion. Now, there's no question about the relative political worth of these two items. Defence only rated one mention in one sentence of the Treasurer's budget speech this year. For better or worse, there's no votes in defence at this time. This raises a question. Why has the government renewed its commitment to defence at some political cost, yet presented a plan with insufficient money to deliver? The most positive interpretation is that they're hedging against adverse strategic developments. On the one hand, they're retaining the ambitious plans of 2009, while on the other, providing only enough money to keep the program ticking over. The new Defence White Paper provides surprisingly few hints at what's behind the government's thinking. Carefully drafted to avoid giving alarm to anyone, it almost begs the question of why we need to spend so much money on high-tech military equipment. But as always, actions speak louder than words. If you want to know what's going on, follow the money. In that regard, two developments in this year's budget are particularly noteworthy. In the maritime domain, the additional cost and risk of a bespoke submarine has all but been accepted. Rather than live with the limitations of a short-range, off-the-shelf submarine, we're going to build boats capable of operating at far range from Australia, as far as North Asia. In the air domain, we're going to have a mixed fleet of what could be described as the best combat aircraft that anyone would be willing to sell us. Aircraft of sophistication beyond anything likely to emerge in Southeast Asia. On both counts, I would argue the implication is the same. The government is hedging against a serious deterioration in the broader strategic environment, a disruption of the sort only conceivable if the US-China relationship confounds the White Paper's optimistic expectations. The description of the present environment, or the present situation, as a hedging strategy is perhaps overly charitable. To some extent, it looks like a case of doublethink. We want a strong defence force, but we don't want to pay for a strong defence force. So full steam ahead, we'll plan for what we want and hang the consequences. Of course, there's nothing new in any of this. The same thing happened in the 1987 White Paper, and it happened again in the 2000 White Paper. Though I should add, in both of those cases, the extent of the gap between aspiration and commitment of funds was probably smaller than what it is today. In each case, 87 and 2000, reality soon asserted itself over wishful thinking. The reckoning for the 1987 White Paper was the 1991 Force Structure Review, which cut personnel numbers, principally in Army and Air Force, to free up money for investment in high-end equipment. In 2003, the opposite happened when the Defence Capability Review cut existing air and maritime platforms but preserved plans to expand the land force. The outcomes in 1991, at the end of the Cold War, and in 2003, at the start of what was called then the War on Terror, were very much products of their day. What they had in common was that they adjusted the force structure to meet the demands of the present and the perceived challenges of the future. Each tried to manage strategic risk with limited resources. So here's the question. What will the reckoning for the 2013 Defence White Paper look like? If nothing else, it will have to face the perennial problem facing Australian defence planners. The balance between the Army and the capacity to take the Army and support it at some distance from Australia, and on the other hand, the investment in the high-tech air and maritime capabilities which we typically associate with being able to defend ourselves against a high-end risk. With the Army returning home to barracks, the natural tendency will be to repeat what happened in 1991 and shift resources away from personnel to investment for the Navy and the Air Force. But things aren't as simple today as they were in 1991. We've had the experience of East Timor and we've had the experience of the Solomon Islands over the last decade. We now realise that Australia's interests can at short notice be called upon in such a way as to require land forces for stabilisation operations. So it's not going to be as simple as last time. And the impulse to cut the Army is probably going to need to be tempered. The other thing that will certainly emerge in the years ahead is a renewed push for efficiency. Or to put it another way, it's time for another slice of magic pudding. Defence has been subject to repeated efficiency programs, and if you add up the scale of all of the savings claimed in each successive program, you find you get a ridiculously large number that's beyond credibility. At this point in time, reform is continuing within Defence. The Strategic Reform Program is no longer reporting against its targets, but reform is occurring. It's occurring in shared services and it's occurring in the sustainment sector of sustaining the material component of the ADF. On the surface, the prospects for further savings look good. It's clear that Defence grew top-heavy and bloated in the good times of the 2000s when executive and middle management positions exploded in the civilian and military workforces. Let me show you one here. What we've got here is military star-ranked officers, that's brigadier and equivalent and above, and civilian executives, that's members of the senior executive service. You could almost overlay here the rate at which the unexpected revenues or the terms of trade improved during that period. You get a big kick up just after about halfway through the decade. An even more dramatic increase can be seen in civilian middle management numbers. This is people at the EL1, EL2 level, or half colonel and colonel equivalent. On the military side, also an appreciable growth, but not nearly as appreciable as in the case of civilian officers. It should be said, however, that this growth wasn't isolated to Defence. Similar, although perhaps not so dramatic, increases occurred in a whole range of government departments over the same period of time. In any case, it's unlikely that savings on a sufficient scale to make current plans affordable can be found by trimming the upper ranks. There might be good reasons to move to a leaner organisation to make it more responsive and clarify accountabilities, but you're not going to buy yourself an extra 6 submarines by doing so. The prospects for savings from another round of outsourcing aren't great either. Apart from there being only a limited number of functions left to be privatised, remembering we began privatising functions in Defence in 1988, so we've been at it a long time. At the end of the day, when you do so, what you're doing is you're replacing a bunch of people in uniform or in the APS with a bunch of people working for a contractor. So what you're getting is the difference between two large numbers. I'm not saying it's not worth going for, but it's nowhere near the scale of what the intrinsic cost of the activity is. Moreover, the durability of those savings then depends on the relative business acumen that can be deployed on the one hand by Defence and the other hand their commercial counterparties. Taking that into account, the durability of the savings is far from assured. So by all means, let's produce as lean and efficient an organisation as possible, but don't pretend that that's going to be enough to balance the books. Look at it this way. Let's say we pulled out all the stops and we produced an organisation that was 10% more efficient. Well, that would be sufficient to accommodate 3 years of the intrinsic growth in the cost of maintaining capability. The graph I showed you before exemplified by the US Navy figures. Greater efficiency will not remove the need to make hard decisions. At some point, a future government will have to decide on whether to provide more money or scale back on the plans for the size and sophistication of the Defence Force. In the meantime, Defence needs to get on with the job of delivering. In this sense, the budget has given them a second chance. Performance over the next few years will be critical to the confidence that the government and the public, the taxpayer, has in Defence. Two areas are likely to present particular challenges in the immediate term: personnel and procurement. As things stand, this financial year, the uniform strength of the ADF is about 1,900 personnel below what was budgeted for. A number of factors are probably at play behind giving rise to this shortfall. Some members have undoubtedly been attracted away by better paying jobs. It's no secret that the private sector highly values trained military tradespersons. And with the resource boom still continuing, there's plenty of opportunities out there for them. At the same time, the nature of Defence service is changing. We've had near on a decade of high operational tempo, which has allowed people to practice their profession in other than a peacetime environment. And as we transition to a lower operational tempo, it's likely that many of those people will choose to move on. On the procurement side, let me start with some good news. Every year I go through and I work out from the Defence Capability Plan and the Capability Planning Guidance the average anticipated rate of approvals that you can extract by looking at the projects in the plan. And then I compare those with the number of approvals that have occurred. You can see here the result for this year. Second pass approvals were only about 5 or 6 projects below what was planned for this year. Defence advice is that they hope to take another 5 projects through this financial year. So, for the first time in quite some time, we can perhaps have some confidence that the rate of approvals will match what was planned. That's notwithstanding that there's some very ambitious rates of approval envisaged for the next couple of years. On first pass approvals, that's the initial approval of a project, authorisation for Defence to go, develop options, spend some money, buy some information, the situation isn't looking so good. You can see here we've got 4 so far this year and there's another 3 planned to be brought forward. If you take first pass approvals as a lead indicator of future second pass approvals, we're well behind the curve at this point in time. But I should say, on the basis of second pass approvals, we're doing better than we have in previous years. At the same time, DMO has reported improvements in the delivery of projects on time and within budget. So, compared with where we've been over the last decade or so, we're seeing improvements both in the approval of projects and their delivery. But there's problems ahead. When the cuts were made over the last 4 years or so, there's always a decision: where do you cut from? Well, we know it didn't come from personnel because personnel numbers haven't been touched. Operating costs were suppressed a little bit, but they kind of get driven by personnel costs and by the force structure. Where most of the money came from was there was a big chunk of money taken out of capital investment. What we've got here is the unapproved major capital investment program. That's things that are planned that haven't yet got the tick. And we've got the grey down the bottom here is things which have been approved and are underway and are delivering. You can see here that the increase over the next couple of years is very ambitious. 75% increase in the volume of work going out the door in DMO. On past experience, the sort of trend increase was 5 or 10% per annum. So we're setting DMO up with a very ambitious task going forward. In the longer term, the biggest procurement challenge will be the raft of domestic maritime projects that were reconfirmed in the new white paper. On the positive side, the government is moving forward in several areas, including, most importantly, by spending real money, $200 million committed, to start on what will be the most expensive defence project in Australian history, the replacement for the Collins-class submarines. Less encouraging is Defence's shipbuilding plan released alongside the White Paper. Developed in consultation with local industry, the new plan touts potential savings in the tens of billions of dollars to deliver the maritime projects in the DCP. Yet, on close examination, its concrete proposals are almost certain to cost the taxpayer more rather than less in the decades ahead. With shipyards lobbying on the front page of newspapers for work and unions threatening to strike if orders for more vessels aren't forthcoming, we urgently need a rational approach to shipbuilding that puts efficiency above vested interests. So where does all this leave us? Good news, after 4 years of cuts, defence spending is on the rise again. But the growth is occurring from a low base, and in absolute terms, funding remains well below what was promised back in 2009. Yet, plans for the ADF remain as ambitious as they ever were, and in some areas they've grown. There's a Groundhog Day feel about this year's budget and the broader plans for the ADF that are now on the table. As always seems to be the case, there's a gap between means and ends that needs to be closed. And that gap is at risk of growing in the next few years, growing as the next government pushes the government's finances into surplus, and growing because of changing economic circumstances for Australia. At best, what we have at the moment is a hedging strategy, a strategy that preserves the option of developing a larger and stronger defence force. In the circumstances, that's probably the best that defence could have hoped for out of a budget brought down at this point in time. At worst, we're avoiding hard decisions, and we're at the risk of wasting a lot of money on things which will ultimately not be followed through on. Thank you.
Well, ladies and gentlemen, we'll get underway just a few minutes early to make it possible to get the maximum number of questions out on the table. And being a good public servant, I've done a bit of pre-cooking to make sure that we have some questions underway. So I'd like to offer the floor first to Senator David Fawcett. David, you might just wait until a microphone appears, which will be heading towards you straight away, and then we'll get underway.
Thank you, Peter, for that. Mark, thank you for your presentation. Those of us on the other side of the lake are interested. I'd like to hear. I come to you a figure of 3% in cost growth pressures. That roughly equates with PAPAS's figures for cost growth for their force-in beam. And a lot of the commentary is on future capability and deferred projects. But it strikes me a lot of that $33 billion over the period to 2022 is actually hurting defence now and their ability to sustain the force-in beam. Would you care to comment on how big you think that impact is?
Thank you, Senator. I think the next few years are going to be very, very interesting. There's a whole series of capabilities that were planned for last decade that are actually only now coming online because of delays. The armed reconnaissance helicopter, the multi-role helicopter, air-to-air refuelling, AEW&C, and very quickly, by the end of this decade, hopefully, we'll have the air warfare destroyers online and we'll have the landing helicopter docks online. As a result, I think there's a wave of NPOC, net personnel and operating costs associated with this new equipment that's going to begin washing through. There is growth in the maintenance budget and in the sustainment budget going out for the next 4 years. We can see that. Whether that's sufficient, taking account of the entry into service of these new platforms and taking account of the offset of old platforms leaving, is hard to say. But I wouldn't be surprised to see pressures emerge over the next few years.
Now, we've got one from Tony Smith over here, and then I'll go to Brendan Nicholson after Tony. But Tony, over to you. And there is a mic coming in your direction from someone.
Mark, thanks very much. As always, congratulations to you and ASPI for doing a great job. I asked this question last year, so we'll have a crack at asking it in a slightly different fashion. You mentioned a couple of times during your speech the notion of hedging, and that the white paper combined with the budget sort of creates a hedged environment for defence going forward. Excuse me. If you look at hedging in a private sector context or a commercial context, okay, it doesn't matter you talk about exchange rates or commodities or whatever it is, there's always an enormous amount of analysis that is done, whether it's actuarial calculations or financial modelling calculations for the future. There's always this very significant effort put into the notion of whether to hedge or not to hedge. Okay, we don't have any of that in a defence environment. You've got a situation where you talk about capital expenditure programs around capability that are unfunded. And therefore we always face the risk, as we've seen in the past and we're going to see in the future, of commitment to a program which, presumably for political expediency, is likely more often than not going to change at some time in the future. And in the process you burn hundreds and hundreds of millions of dollars. Would you care to comment?
Defence planning at some level is all about hedging. It's about being prepared to accommodate the risks that the future might have. At the moment, I think the extent of the hedging, given the gap between means and ends, has become, it's reached a higher level than normal. You're quite right that in the commercial world, you can have historical data and economic models that might tell you something about the terms of trade or exchange rates or fuel prices, and you can, there's markets out there that will help you hedge against those things. In the case of defence, the sort of things we're hedging against are far less tangible. They're about how the international system might, work better or work worse in the future. Might work in our interests or might work against our interests. And ultimately, judgments have to be made. There is no magic machine where you can turn the handle and get numbers that come out. And moreover, I think it's a fraught enterprise. I think that it's easy to talk yourself into thinking that the future is much more dire than it actually is. Hence, almost everyone's speech begins with the future is much more uncertain than it's ever been in the past. They must have not seen the 20th century. But by the same token, we can turn the mood music on and we can tell ourselves very soothing stories about, everything's going to be okay, the US will remain the preeminent power in the region in perpetuity, and lull ourselves into a sense of complacency. I don't have I recognise those two dangers there. I think what we need is a very active debate among people who are interested in defence, among academics, among people involved in the profession of arms, among politicians, about what sort of future Australia faces strategically and how we might best respond to that through all of the avenues we have, through diplomacy, through aid, and through developing military capabilities should the worst happen.
Let's go to Brendan.
Brendan Nicholson from the Australian Mark. That was intimidatingly masterful as always. But you've explained in great detail how, perhaps with this hedging strategy, the money will eventually run out at some point before we get to this potent defence force we've promised. Now, a significant part of that defence force is already in the building, air warfare destroyers and landing ships, as you mentioned. Is there a point that you can identify when a crunch is going to come some years ahead, where someone's going to have to start pouring vast numbers of extra billions into the defence budget to build this stuff, or make a decision that we don't need it? Is there a year you can identify general terms?
To some extent, the crunch will come, but the crunch will depend upon decisions that are made between now and that time. Sometime next year or the year after, decisions will be made about how much money to put into keeping the force at a high state of readiness. There's lots of things that can occur that might not be highly visible. Back in the 1990s, we went from developing advanced air and maritime platforms that were ready for combat to ones that were fitted for but not with. And these sort of things can be used to accommodate a lot of cost pressures. And they're perfectly legitimate strategies to adopt, just as pushing down the size of the army and relying to a greater extent on the reserves is a perfectly viable strategy to have. And depending on what strategies we take, we can buy more or less time at the cost of more or less risk. There's no free lunches here. But on the basis of history, 1987 to 1991 was 4 years, 2000 to 2003 was 3 years. So I'll give it 3 or 4 years on the outside.
And then what?
And then decisions will have to be made.
More money or less resources?
Yes.
So two elections, Brendan, not one. Two elections. Catherine first, then we'll go to David.
Hi Mark, Catherine Ziesing, Australian Defence Magazine. Defence and defence industry are very fond of the maxim, people are our greatest asset, they're also their greatest cost. At what point will defence start cutting people? What circumstances will the government need to face?
Well, it depends what sort of risks they want to embrace and what sort of risks they want to try and be prepared with capability to deal with. And in the case of personnel, the principal driver of the elastic part of personnel in the ADF is the Army. The Navy and the Air Force are more or less driven by the force structure. You need a certain number of people in order to successfully crew and operate and maintain the platforms that they have. The elasticity exists in the Army. That's what we saw 1991 Force Structure Review principally took people out of the Army, took 2 battalions away and turned them into ready reserve battalions. It comes back to the question of what sort of risk. If you worry more about a deterioration in the broader strategic environment, which would have very dire consequences, you may well say, okay, we'll take some greater risks in terms of what we might need the Army for to free up money for investment. Alternatively, you might say, well, the region's going okay, we'll bumble along okay, but we've really got to be ready for another Solomon Islands or another East Timor, in which case you'd want to keep the Army and perhaps do some more fitted for but not with, perhaps scale back on the number of submarines. Whatever you do, you're going to accept greater risks somewhere in order to have a capability that helps you deal with other risks that you assess are more important to deal with. I think what I tried to allude to before was that in 1991 it was pretty clear. It was the end of the Cold War. We could do what we did. In 2003, once again, we had a big impetus to keep land operations going in Iraq, Afghanistan, Solomon Islands. So we sacrificed air and maritime capabilities. At this point in time, I don't see any easy decisions out there.
Let's go down to David, then Henry Ergas, then John, you might get the last one.
Mark, David Rowe from the Sydney Morning Herald and the Age. Thanks for your Herculean effort yet again. Just on submarines, the talk of them as the bespoke option as the most expensive and riskiest. In your view, were we to go for the off-the-shelf option, how far would that saving go towards making up the shortfalls in the other areas between our ambition and the money that's been allocated, and should we therefore do it or not? And just as a second part to that question, subs are one of the many bipartisan areas, it seems now, between the two major parties. You talked about the sort of flaccidity of the political debate around this. Does one side or the other, and I'm not asking for your voting intention here, but does one side or the other have anything that's outstanding that just gives them the edge a little bit on defence budget questions?
Going straight to your first question. I urge you to catch up with Andrew Davies. He's ASPI's expert on the submarines. But just briefly, I want to talk about the budget and decision making and planning, not about my personal views of things. So let me just say something about the trade-offs between an off-the-shelf submarine and a bespoke submarine. The trade-offs are more or less like this. If you've got a small off-the-shelf submarine, it's going to have more limited range. If you want to operate it at greater distance, you're going to have to find ways to stage operations from intermediate points, and these things have additional risks associated with them. They're also smaller submarines, so that habitability becomes more difficult. Larger submarines, on the other hand, you can operate at distance without intermediate staging, have longer endurance, greater payload, but much more appreciable risk and cost associated with them. To some extent, I think it comes back to a very zeroth order question Australia has to ask about the air and maritime capabilities it's developing. If you look at the white paper in a sense sees Australia pivoting to Southeast Asia, to having not a defend the moat approach, but having an approach which focuses on our part of the world centred around Southeast Asia. If that's your focus, the compromises that you might have to accept with an off-the-shelf submarine are much less acute than if your strategic horizon extends all the way up to North Asia.
We'll go now to Henry Burgess.
Thank you very much, Mark. Like everyone else in the room, I'm extremely indebted to you and of course to ASPI for the fantastic job you do every year in deciphering the defence budget. Indeed, to my mind, it is extraordinary and a fantastic achievement that we have such a clear analysis of the defence budget and that we have nothing comparable in other very important areas such as health, education and welfare that we could look at every year. It lays out as clearly and succinctly what the major issues are. And the question I have for you, to some extent, derives from that. You've been doing this now for 12 years, and over the course of those 12 years, there have been many changes made to the way in which we present budget information, both in defence specifically and more generally. We've also now got a parliamentary budget office, which is intended to bring greater transparency to the budget process. What changes would you like to see in the way the defence budget is presented in the years ahead, and how would they link back to the broader policy questions that you've raised?
Consistency, consistency, consistency would be the top three things I would want to see in the presentation of the defence budget. From time, 4 or 5 times in the last 15 years, the defence budget has been recut in terms of how its internal distribution of funds is put. Sometimes we do it in terms of outputs, sometimes we do it in terms of organisational units, and then we change the organisational units and we change the outputs. So if you want to try and do a time series and go, well, how has this changed? Now, how have the number of people performing this particular function changed over time relative to the volume of the function? You can't see it from the outside. It's impossible to get those time series out. So consistency would be the main thing. And I should say, I think internally within Defence, it would assist them greatly in being able to understand their own business if they were able to look back historically with a consistent data set that had everything in it. Beyond that, 2 points. One, from my point of view, more information is better than less information. Lower levels of disaggregation are better than higher levels of aggregation. The more information you have, the more understanding you can discern by analysing the numbers. And I must say, the introduction of accrual accounting from about 2000 onwards, I don't think has added anything at all, and has added, if anything, a layer of obscuration and a whole lot of busy work for people, not just within Defence, but within government as a whole. I don't think there's been a net benefit there that's been worth one iota of the effort, the very gargantuan effort that's been put into recasting the books in accrual terms.
Gee, I didn't pay Mark to say that, but I will do. Last question, John Perrin.
Thank you. Mark, I'd just like to ask you about the disconnect between the weapons that are being bought in this white paper and the more benign view of Northeast Asia and China, and also why you think defence planners are having an out-of-body experience.
Okay. In previous years, in various publications, I've made the assertion that there's a disconnect between the force structure planning and the narrative that's been presented in the white paper. But ultimately, that's a matter of judgment. There is no strictly logical deductive process which takes you from statements about the nature of the international system and tells you you need 7 rather than 8 of these with this particular weapon system configuration. And when I've made those statements in the past, no doubt people with a different point of view, with different experience, might well come to a different conclusion and say, no, it's perfectly consistent. But this year, it's a bit different. We've got a force structure which is more or less where it was in 2009, but if I listen to all of the commentators who've read all of the opening chapters and pulled out Asia-Pacific, Indo-Pacific, saying mean and beastly things about China, saying soothing and cajoling things to China, whatever, these are different narratives. We've got different stories out there going from one white paper to the other, but the force structure has stayed the same. Now, there's one explanation of that is, and this shouldn't be discounted, is that at some level the fundamentals of Australia's geography actually dictate the force structure we need, more or less independent of the narrative that we put forward. We live at the tail end of a very large and expansive archipelago full of lots of islands. Our geography is what our geography is. So to some extent, the fact that the force structure stays the same but the story changes can be explained by that. The other explanation is that the force structure is a result of decisions that are principally made by the operators of the equipment today about their own professional aspirations that are disjoint from strategy. And that is the point I've made in the past.
Well, ladies and gentlemen, when I think about national security gems, I think about the SAS regiment, I think about ASIS, I think about the Defence Signals Directorate, the Australian Signals Directorate, and I think after 12 budget briefs, Mark, I'm now going to make you my 4th national security gem. There is no pay rise associated with this honour, I have to say, but mate, you've done a tremendous service, I think, to us all. And indeed, it's the consistency of your performance over the better part of a dozen years now, which I think has brought us to a point where we have a much clearer understanding of the budget fundamentals. The department may not always love it, but by golly, they need it. And so keep on going. And ladies and gentlemen, can I ask you to thank Mark Thompson? Thank you.